Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, the 6th of June, 2017, about 1:50 p.m. Central Daylight Time. Hey, folks, I appreciate all of you writing to us in different ways. Yeah, I had a family member that had to have a big operation. I wanted to be there with her. I was there. Now I'm back in Chicago, and it was only a day, but I was out of state for the day. All right. I feel pretty good about the metal calls. You know, I've been looking for the gold to go up. I've gotten what I want. But let's all understand what drove this market, and you're coming now to the anniversary of that. This market's up because of the UK elections, the uncertainty surrounding what's going on with Prime Minister May. She called a snap election, thought she had it in the bag when she called it. She didn't count on Manchester. She didn't count on the London Bridge. And that has changed public sentiment. Does this election slap her in the face and say, no, you actually lost more control in Parliament and basically you got a very weak hand going into Brexit? Or do we get surprised? And I use the word surprise because I'll explain the polls to you in a minute. And she gathers strength. The polls go from a 1% edge from her up to an 11% right now. That's a pretty big span. Then we get on Thursday as well. These are all Thursday. We get the European Central Bank announcement. Now, from what I'm reading, no one expects the bank to deviate. There are many who want the bank to start saying, oh, the economy's better, blah, 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 blah. It isn't if you're watching wage growth. Yes, the unemployment rate is falling there and in America, but wages aren't going up, nor is inflation. Big problems. Trade there, fine. But all of this terrorism probably has Mr. Draghi thinking he's right at this point in time. He's going to sit pat. That's what I think, but you never know. Then we get ex-FBI Director Comey. So when he speaks on Thursday, is there a bombshell waiting there? So what do? You get the yen, a traditional safe haven market, right through the roof. Then we get the bonds and the notes. Believe it or not, the notes today hit 2.13 and a fraction percent, the lowest of the year. Now, let me think. Next week's the FOMC meeting. The Fed's raising interest rates. So what's going on is a total flattening of the curve yield. That's not a great sign for an economy that's supposed to take off. What else? The market has to be worried that if Director Comey speaks and says something that derails even further President Trump, his agenda for stocks, his agenda for the infrastructure of the economy and so on gets thrown back. On the other hand, if the president is totally vindicated, everything goes back into play, could get very interesting. It's going to be an interesting time, and maybe safe haven plays start coming off quicker than people think, depending on how this all goes. Enough of that. In the gold, you know what I'm going to say. 1299.60 should be enough to about stop the market, but I'll tell you, if you're using your head here, you can see you just missed hitting it here, you just missed hitting the upper Bollinger Band there and there. Why not? And as a pro, I would be telling and counseling people, this is where you take some money off the table on a weekly chart. You don't have to go to the exact number. You're in that region. And that's what I think is going on right now in the smart money. As we take a look at where the area chart of closes is, well, that's going to be interesting. The last highest close was 1275.40, and that was before I left for the week. And now you're up here beautifully at 1293. So I'll get rid of that and have that at 1293 for you. But that's a heck of a nice run. And notice that you're now honing in on this 1300 level on an area chart of daily closes, not the weekly. And look at how this looks up here. It's another reason that when you get up into these apex areas that's failed in the past, I think the pros take some money off the table. Just telling you that that's what I suspect. In looking at the swing line, it's in an uptrend. The definition of an uptrend is a pattern of higher lows, and that's the apexes, and higher highs. The beauty of the swing line is it doesn't allow you to think. It is what it is. It takes into account outside days, inside days, higher high days, lower low days, every combination you can imagine with a set of specific rules that draws these apexes. Therefore, in order for the trend to be broken to the upside, you'd have to get under 1261.30. That's important. What else? I told you last week that I thought you were going to see the 18-day average get over the 200. That's a bullish crossover. And when that occurs, it is not unusual for the market to go for new highs. So here you are on Friday. Yes, Friday. Remember, I couldn't show this on Friday because we did our weekly review and I wasn't here yesterday. So this is how you finished on Friday. I did the weekly review and I'm waiting to see a crossover on the daily. I get the daily crossover. To get the surge today, absolutely no surprise. It's exactly what I would have expected. Now you have a long-term bullish setup. You have the 18 over the 200, and I won't be surprised to see in the next month, whatever it's going to take, that 100 make its run at the 200-day average. That takes a long time. It could take 2 months. But that's what I think is going to be happening here. This market, until you give it reason to say differently, is a market that has managed to climb over that 200-day average. It's entered a long-term bullish pattern. However, what did you just hit today? So let's backtrack. Here you are in the market Friday. My target is going to be the first target, the upper Bollinger Band. Here's the run, if it can get there. Now that's yesterday. Now I'm back. I say that the pros took money off the table today. I can't tell you if they took all their money, how much of their money, but if you don't take money off when you hit a Bollinger Band, you leave on the table often areas where you may regret it. That doesn't mean you can't hit it and run further. That's why I say I don't know that they took all of their money. And the most difficult thing is if you're a one-lot futures trader, it's hard to be right with one lot for the big move. It's so much easier if you're trading multiple contracts to at least move a stop to break even and you let the market do its thing. Slow stochastics, you know what I am. I created the idea of what embedding is about. George Linn created this part. I know I carried it another level because I discussed it with him when he was alive. And this market looks to me like it's embedded, which means it's locked in a bull trend until the red line closes back under 80. I can't begin to tell you how long that will be or how short, but that's where you're at. When I come to the ETF of gold, let's go back a little bit. Let's go to Friday again when we look at these things. Higher lows, higher highs, upper Bollinger Band, the goal, embedded reading, didn't quite hit it yesterday. Today you hit it. So again, I think the pros are taking some money off the table right there. When we come to the gold miners, they finally came alive. Now this was how the gold miners looked yesterday when I wasn't here. If it takes out this high, the objective is the 100-day average to the upper Bollinger Band. You closed well, from the looks of it, you're going to close well over both. That's going to cause this Bollinger Band to turn if it gets any follow-through. Tomorrow's going to be a very important day, but the trend is fully to the upside. The question is, can you get the 18 to close over the 100-day average of closes? Silver gold, stuck right here. Let's call it stuck between 73.5 to 72.5, just sort of meandering back and forth, as silver still has some life in it, and unlike the gold, it hasn't yet reached up to the upper Bollinger Band. That doesn't mean it's going to, but it's got a good shot at it. It's got the embedded reading. All systems are still go here, and unlike the gold, it has a pattern of a higher high and a lower low, so even corrections look as though they'll be pretty good, well taken. Copper market, to me, I think the pros are selling it short in this 256.30 area, as long as it keeps the swing line down. You'd have to take out 257.60 in order to negate the downtrend. Downside target, 251.15. Platinum, what am I going to tell you? You're up to the combination of the upper Bollinger Band, 969.60, and the 100-day average. Guess where you went today? 269.50. There's that combination, down $8 from there. That's what I think the pros did. And the market is in overbought territory with the 73 stochastic reading that you see right there. Palladium, overbought, not embedded at this point, riding the upper Bollinger Band, and it too is up on the day $8. Now, I know I've mentioned to some traders that I thought they were going to reverse some of these spreads. I do that in my morning subscriber video, and you'll have to see that in order to know what I was talking about. As we go to the dollar index still looks bearish as can be. Embedded reading, lower highs, lower lows. In order to negate my thinking in the market, you got to take the red line and close it over 20. Barring that, there's no reason why I still don't have as a live potential target. Doesn't mean it'll be hit. 96.03. If you take out the swing line at 96.93, it still doesn't mean that you're going to turn the stochastic. This takes the day and rules the trade as far as I'm concerned. You know, I keep talking about that morning video that I have, and if you don't start your morning off with a cup of coffee like I do, that's the coffee cup there, and you're looking at that, I think you're making a big mistake. I review 40 charts or more in the morning, live. I'm not in them like I am here. I'm recording my computer screen, and I'm walking you through everything. I'm also reinforcing, for those of you that take my charting course, exactly what I teach in it. And you'll pick up on that in 2 seconds. In fact, the vast majority of people in my research have taken that because they view it as, number one, reinforcing what they've already learned. Number two, they want the research because they're looking for a potential. Maybe I throw an idea their way that they were thinking about, or one they were thinking about of doing and saying, you know, he's got a reason that he doesn't like it, whatever it might be. So what I do is I offer couple of things. Number one, if you haven't tried my research, and this is what the written research looks like right there, I want to give you 20 days free to it. Just go to our website, www.iraepstein.com, click on the icon at the top, sign up for it. I'm going to put it in your hands. You'll get 20 days of it. That's business days, so you're going to get about a full month. You decide from there if you like it. If you've taken it, this is a great time to find out what the UK, Mr. Comey's testimony, Mr. Draghi's ECB, how does it all fit into what's going on? I'm going to be writing about it. I'll give you IRA 20. Write that down, IRA 20. $20 off your first 30 days if you're not a subscriber. So if you go in under this program, normally it's $60 for 30 days. It's going to be $40. If you have a trading account with us and you want to go with this, it's $20 because what it would be is $40 if you have an account for those 30 days. I'll reduce it by 20. Just put that in there. You can click up here to get to the coupons and everything that we have for the free research. You can go to our webpage. Underneath us it says click here for IRA's free offers, or you can call us at this number. It's the best way to do it, and we'll take everything over the phone and get you hooked up. I'm Ira Epstein. Thanks for watching. Good to be back, and I'll talk to you all at the end of the day or in the end of the day video. Take care now.